Hello, everyone. Welcome to the stock-specific class here for Thursday, July the 8th. We're seeing some of that volatility in the market this week that we talked about on Tuesday. And kind of the where the market is right now, it's very difficult to predict the near-term movement. As I've mentioned a few times before in some of the updates, well, we're right here on the direction alerts. One of the things that has concerned me is that we're in the extreme on momentum and on the sentiment down here. But although we backed off of it, we were on the kind of the right side of that extreme box last Tuesday with the market pulling back a bit. It's come off a little bit there, but the breadth has been lagging. And in other words, the participation, the number of stocks that have been participating is smaller. Now, the difficult part of that is that it a lot of times that happens before a correction. You start to see fewer stocks that are driving the market higher, and that's a warning sign that the market could be pulling back. But it doesn't always pull back when the breadth declines. Sometimes it's just a pause that's taking place, and you can get another move higher still. So again, trying to predict the shorter term movement of the market when you get the signals like this is very, very difficult, because you could say on the one hand it's a warning sign that we can pull back. On the other hand, it doesn't have to pull back. It could just be a little bit of a pause. It does tell you that you're near a top, but it doesn't necessarily tell you that you're at the top. In other words, what I'm worried about when I see that divergence like that is that, we're in this uptrend, and you start to get that lack of participation, that lack of breadth. It's suggesting that you could pull back a little bit, but does that just mean you're going to pull back a little bit right here, but you still move higher? And that's kind of where we're at right now. Is the pullback we had early today? We kind of reversed that too. The Dow is down a lot more than it is at the moment. Does this mean that the market's going to push higher again off of this bullish reversal today? And does that mean that not only if it does push higher, do these indicators move back to the right side of the extreme, but do we see the breadth? Do we see participation really come in and push the breadth to the extreme level? And then you're got to be worried about a larger correction taking place at that point. So these signals we're getting are telling us we're near a top, but I don't see anything really screaming that we're at the top yet, because of that lack of breadth in the rally. So, but there again, it doesn't necessarily mean that we have to have that push higher. Because I tell you what, we have this little bit of a bullish reversal today. If it goes back down, and we'll look at the S&P chart here. If it goes back down below today's low in the next day or two, that's going to trigger some heavy selling, most likely, some panic, because a lot of the people that bought the dip today, thinking that it's just going to go right back up, would then panic and start selling. So it's just real difficult to know near term. What the market's going to do. Now, I'm not trying to suggest that I always know in the near term what the market's going to do, but from a probability standpoint, and those who have been following the updates know that we're pretty close in reading the price action of what's going on in the next few days or so. It's not that difficult when you know how to read the price action, but there are periods that the market gets in where it's very difficult to read that short-term price action, and when I get in these types of conditions, a lot of times I just stop trading or take a break or just stay out of the market as much as I can, just because the probabilities are not in my favor. If I feel like I'm guessing as to where the market's going to go next in the next few days or so, then obviously I don't have an edge, and it's more of a gamble at that point than a planned strategy or an expected outcome. I don't feel like I have that edge in the analysis to tell me what's likely to happen next. I'm just guessing as to what's going to happen next. And so, one of probably one of the toughest things I had to learn early on in my trading career was sometimes the best trading decision is not to trade, is not to do anything. When you get good at reading price action, you can always find a potential trade. Every day I can find something to trade. But the question becomes, should you be trading, and if the probabilities are not really in your favor, sometimes the best decision is to not do anything. And that's usually the toughest thing to do, is to sit on the sidelines and to recognize when those probabilities are not in your favor. So now that usually changes. Usually when we get into these types of conditions, things kind of play out pretty quickly to where we can start to read things a little bit easier, and feel like we have that edge again. But this week has been one of those weeks where I wish I had a vacation plan, because I just have not liked the odds of getting that trend direction right. Now, as far as let's get to the charts here real quick. I can show you what I'm talking about here. So you can see on the SPY chart, we opened lower. We had that big gap down at the open, and then since then we've moved up from that. Now that's a bullish reversal, and this is why it's important to learn how to read price action, because if you just look at the indexes, all the indexes are down right now, and it's real easy to say, well, the indexes are down, so it's got to be a really bad day for the market. It's really got to be a bearish day for the market. Well, again, the fact that we opened much lower, and we're looking to close higher than where we opened, although we're still down from where we closed the day before. That's a bullish reversal. That's a bullish type of price action. Now, I mentioned today's low is being key, because when you have people buying that dip, that's what's causing the market to go up. Is that we had the low open, and people are jumping in and buying some of these stocks that open lower, that are pulled back. Usually the people that are doing that, especially after the market's run up like it has, are usually they're the weakest buyers, because they're the ones that are just buying because the market dipped. And I'm not suggesting that that's all retail traders. Retail traders are often considered the dumb money, so to speak, but that's not always true. There's institutional traders that as soon as the market pulled back a little bit, they're jumping in as well, because they've been itching to jump back in, and they're just buying any dip that takes place. What happens then is that if we were to reverse that, if we were to drop below today's low, well, because they were more emotional traders, they were just jumping in because the market dipped. Then when it moves down below that low, it means they're losing money, and they're also going to make that emotional decision to get out. They may not necessarily know why they're in their trades to begin with. They're just in it because they think the market, they think it's going to go, it's guaranteed to go back up, and they're going to be the first ones to panic and start selling to get out. Whether they're selling because their profits are diminishing, maybe they got in right at the low today and they have a nice profit sitting here at the end of today, but tomorrow, if the market starts to move down and goes below that low, that gain starts to diminish and they panic and start selling, or that it turns into a loss and they start selling. So if it does move below that low, today's low, you would expect that selling to accelerate, and it could drive things down a lot further. So that's just something to keep an eye on. This is not the strongest bullish reversal candle to buy. The reason I say that is because the strongest one is when you've been dropping for a little while or you've been consolidating for a little bit. So here we had this big drop, we rallied it a little bit, and then we had a down day right here, and then look, we had that bullish reversal candle right here where we gapped all the way down, we reversed it, we closed higher than where we opened, but still lower than the day before. This was a little bit stronger because we already had a little bit of a consolidation or pullback that took place, and then that's what kind of launched this rally right into here. When you get a bullish reversal candle that happens near a top, it can still push a little bit higher, but it's not as strong, and so we'll keep an eye on that. But that's what adds to the uncertainty of today. It's possible that it pushes to a new high off of that. It's also possible that if it gets reversed, that you have a bigger correction off of it. So again, that's, and I don't want to sit here and just say the same thing for the next 10 minutes. So we could go either way, but we could go either. I just want to try to explain a little bit about why we could go either way, right in this area right here. And typically pullbacks don't happen in one day. They tend to, be a few days where we move sideways or we move down for a few days. If we have this one big down day and then we're right back up to going to new highs again, it's a signal of a top, that we're near a top when that happens. And so that's something to pay attention to. It doesn't mean we're at the top yet, but it's a signal that we're near a top when that starts to happen. Now, some of the other indexes have gotten hit a lot harder. The Dow, you can see it has a bullish reversal today, but in the Nasdaq, Nasdaq had a little bit of a warning that we could drop today just off of the price action. This is one I talk about all the time, where it gapped all the way up here. This is just the opposite of what's taking place today. This would be the bearish version of what took place today, where you gapped higher at the open, closed lower for the day, but still higher than the day before. So the Nasdaq 100 was showing that it was up, and it was one of the only, well, I guess the Nasdaq Russell 2000 was down pretty big yesterday. The others had recovered a little bit, but this was showing, the Nasdaq 100 was showing that it was up yesterday, and because it had been up for several days in a row, you could say, oh boy, it's still going strong, it's still looking good. Well, no, it wasn't, because it closed lower than where it opened, although still higher than the day before. That's a bearish reversal candle. Now it's very short term, meaning that it's just kind of predicting what could happen over the next couple of days, but it should usually open lower or move lower in the next day or two. Sometimes you'll get another day where it pauses, but usually within a day or two, you're going to get a move lower. And here we have the open lower, where it opened all the way down here. Now it could rebound off of this and still go higher in the next couple of days. We'll see. But that was a bearish reversal. But you can see the indecision here. There's a bearish reversal candle, and then today we have a bullish reversal candle. It's like, back and forth, back and forth. It's very erratic. But that's something to keep an eye on. But what's really gotten hit is the small caps. You can see they had a really, for the last few days, they've been dropping pretty big. We did have a bullish reversal candle today, but these have really been lagging, and that's another thing to keep an eye on, because although most people consider the larger stocks to be the leadership stocks of trends, a lot of times it's the small caps that are the key, because there's so many of them. And this is a signal of that lack of breadth that we were talking about, lack of participation. When you have the NASDAQ 100, these are the largest tech stocks, and they're not all tech stocks in the NASDAQ 100, but primarily tech stocks that are breaking out to new highs. And then you have the Russell 2000 that we're seeing right here that are going lower. They're going the opposite direction. That tells you that there's few stocks that are leading that rally. Right now, it's the larger cap stocks that are leading the rally. The small caps have already shown, or they've been showing that they've been peeling off a little bit. Now, again, does that mean that we've had our top and we've corrected and we're going to charge higher here now? I'm saying that we're near a top. We're getting these topping signals, and with this bullish reversal in the small caps, we could start to see the small caps outperform the other indexes. One of the things I've been talking about a lot in the last probably couple months, because we've been consolidating for so long, is that I expect before we get a larger correction, and I still am going to stick with this, is that I expect that the Russell and the Dow will break out to new all-time highs. We go back to let's go back to the S&P here. The S&P is already broken out to a new high right here. It broke out. The Dow is getting close. It got really close, but it didn't break out to new all-time high right here. But I think it'll probably be the next one that will, especially with how deep the Russell is dropped. You can see the NASDAQ 100 has been at new all-time highs almost every day during this run, except for today. And then here's the Russell. Russell has a long way to go, but I think the signals we're seeing right now are early signals that we're near a top. I think we'll have another push higher, and that the Russell, the Dow and the Russell will break out to new all-time highs. But when that happens, I expect that breadth indicator is going to be in that extreme range, as well as the sentiment and the momentum, and then we're really going to have to be looking for bearish reversal signals that could indicate a larger correction is about to take place. When we get to that point, then you have to really back off on your bullish trades, or hedge by protective puts on your bullish trades, because we're probably due for, or just get out, because we're probably due for a much bigger correction at that time. So again, we're pointing out these little clues, because that's what happens as you start to see these little clues as you get near a top. I'm not suggesting that we can know exactly when the top always takes place. Like I said, it could just crash from here, and usually when that happens, though, there's some headline news that freaks the market out, that kind of triggers the selling ahead of time. But I just don't think we're at that stretched level yet that to where that probability of seeing a deeper pullback is a lot stronger. All right. So let's get into some individual stocks that we could consider. And like I said, because a little bit of that uncertainty, you don't want to get overly aggressive. And so I'm not suggesting that each one of these stocks, you want to get into all these stocks that we go over today. But if there's a few that you particularly like, then you could consider them. But just keep that in mind. One of the reasons why we go through and analyze the market conditions before we start going over individual stocks is because we want to know the environment that we're in. We want to know when, hey, this is looking really good for a big bullish run. This is where we want to buy a lot of stocks and really get active. When we're in kind of the near a top type situation, you might want to shorten your expectations for a move. Maybe you're looking for more of a trade where, hey, I could trade this if Russell still hasn't broken out yet, and that's one of the things I'm expecting it to do before a bigger correction. Then maybe I can jump into some patterns where there's good momentum already, there's a nice strong trend already. Maybe I ride it for a few dollars, make a little bit of money on its strength, and then when we start to see those overall market conditions deteriorate a little bit, or start to get into an area where we expect a bigger correction, then I can look to get out. So we want to know what our environment is before we start looking at our individual trades. So under computer and technology, there's a couple that I like. on this pullback, particularly today with this kind of bullish reversal day. But 3D Systems is one I've liked for a little while. DDD right here, 96 strength rank. Let's switch this back. Well, before we switch back to signals here, you can see, so we've had this big drop right through here. We're kind of moving up on the right side of the bowl, which is really what I like to see. But we also have a lot more trend data to go off of. It's been acting like an uptrend. Higher high right here, higher low, another higher high right here. And with this kind of bullish reversal day where we open lower, we could close higher than where we opened, but still a little bit lower than the day before, it could end up creating that higher low again, and showing that this thing could continue to move up again. And again, when you have the previous high up here around 56, there's a lot of potential for a nice upside move, especially if the overall market does rally up, and we're waiting for those overall market conditions to get a little bit more extreme before we worry about a bigger pullback. This thing could have a pretty good run. And this is what I'm just talking about as far as just a trade. Maybe we don't get all the way back up here before we start to see the market conditions get extreme. But even if it breaks out just to a new high from down here at about 32, gets up to about 42, there's a $10 move that's possible there. So that's something I'm kind of looking for here. So, but we switch to signals. It's at a hold signal right now. You can wait for it to go back to buy as confirmation. And you'd want a little bit of confirmation off of today's move, because like I said, if tomorrow we're right back down at the lows and we're going below today's low, that'll trigger probably a lot of selling, and you wouldn't want to be getting into that stock if that were to take place, or anything for that matter if that were to take place. All right, another one in computer and technology is this Global Star GSAT, 95 strength rank. And this is a smaller company, $1.56 a share. But again, you can see kind of a similar pattern. We're at a previous high up here around close to $3. We pulled back, and now look like we're on the right side of that bowl. We're seeing higher highs, higher lows on the trend. So it's acting like an uptrend. And again, now this one, it opened lower, it traded all the way up here, and it's faded a little bit into the close. You'd like to see that close still higher than where it opened. Now, this is not necessarily bearish the way that price action is forming. You can say, well, boy, it was all the way up here and it's selling a little bit into the close. In the context of this is what we call an inverted hammer candlestick formation. It's not the most bullish reversal. A regular hammer formation is a little bit more bullish, but in the context here where you have this pullback already, you have this correction already, it's pulled back a little bit. What this is signaling is that the buyers are showing up. The buyers push the price up, and the sellers are able to maybe push it back down at the end of the day. But it's showing that buyers are there. Buyers were able to push it up. So it may not necessarily be at the end of this correction. Maybe it does open a little bit lower again tomorrow or something like that. But it's telling you that there are buyers there, and if it does start to move higher there, those buyers could start to come back in and push things higher. So again, it's not the most bullish of a candle, but that is still a bullish price action despite the fade into the close in that context. Now, if that happens at the top of the trend, where you've already been moving up, and then the buyers push it up and then the sellers push it back down, in that context, that's bearish, because the fact that sellers were pushing it back down, you've already had the buyers, because that's where you've been in an uptrend. That's a bearish reversal candle in that context, because it's telling you that those sellers are starting to show up. But because it's already pulled back, it's been pulling back right here. This is an indication that the buyers are starting to show back up again, and that's more of a bullish signal there. All right, so I like that one. Another one in that sector, computer and technology, up near the top, actually at the top, this ZTGE 98 strength rank. Again, mostly just the sideways kind of correction. Again, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to move after it's done moving sideways. Notice how I didn't say it's going to go up or going to go in that same direction. It's just, if this were to come all the way back down, that would be pretty rare. You don't see, I call these volcano tops. They do happen occasionally, but they're very rare where it comes all the way back down off of that formation. Usually you get more pointy type tops. And so there's a stronger probability that it should go higher. Now, so it still could dip down a little bit in that range. This could be wave A, wave B, wave C, and it could dip down a little bit further and still end up breaking out. And it could break out. I'm not saying it has to go up in a huge way. It could break out of that sideways range and then reverse, and that would be that point. It'd be a pointy top at that point. It wouldn't be that volcano top. It'd be a pointy top. So, but there's usually, out of this formation like this, there's a pretty high probability that it goes higher from that. And again, this could be just a shorter term momentum type trade. Now, typically though, from a rule of thumb standpoint, when you have a real sideways range like this and you break out of that, one of the rule of thumbs that technical traders will look at is there's a tendency at that breakout, once it breaks out, that it'll move up the same distance of the consolidation or the correction. So this range right here, the distance of this range, top to bottom, you could take that from the breakout point and project it upward, and that gives you kind of a minimum expectation of where that stock could go after it breaks out. So in this context here, you're waiting for it to go back to a buy signal, or you could wait for it to break out of that sideways range as a little bit of extra confirmation, with the expectation that it should, in most cases, not always, but it should move up about the same distance as it corrected, the top to bottom distance of the correction. And there again is kind of a shorter term trade you could take on based off of that expectation. And in this environment, with a little bit of this uncertainty, it may not be a bad idea to wait for that little bit of extra confirmation breaking out. One more in this sector here. Go down the list a little bit. 95 strength rank, but MGNI right here, Magnite Incorporated. I think that's what it is. Again, very similar to what we've been talking about. Had a big pullback. Now, on the way down, there was a lower high. Here's a lower low right here. We haven't gone to a higher high from that downtrend, okay? But in the near term, we've seen some smaller, higher highs, higher lows through here. This is a pretty deep pullback, a deep retracement of this move. So that, really the one reason why I'm bringing this up is because we did have a bullish reversal day that would give it another higher low if it holds. We would like to see it go back to a buy signal, which it's pretty close to going back to a buy signal. Now, again, could I wait for it to get above here to give it a little bit stronger confirmation of breaking that downtrend? You could, but I mean, it's acting like an uptrend in the near term right here. If you want a little bit more aggressive approach, you could, when it goes back to a buy signal, get in. You'd want to keep a close eye on the previous low, though. So if it goes up from here, this low is going to be important, because if it were to go up and then drop back down, now you've gone to a lower low. You've kind of broken the short-term uptrend. You never broke the larger downtrend, so that would be a reason for me to get out, stop out of the trade. But if it moves up from here, goes to a higher high, it's still acting like an uptrend, has a higher low, and then breaks above here, that's stronger confirmation that the trend is reversed. Maybe you add to a position if it breaks that that lower high, lower low downtrend that it was in back here. But this is one that's kind of has some of that early signal of possibly reversing that downtrend. Now, by the way, there's been a few of these that we've done in the market updates. I don't have any that come to mind as specifically, but there have been a few that have been acting like this, and then they might have even gone to a buy signal, but then they broke down and they went to a lower low right there. I'm not suggesting that because this is acting like an uptrend that it's going to keep acting like an uptrend. I think that's important to point out with all these, because sometimes I get it. I've been a beginning trader before, and I've been in meetings with professional traders where they're talking about a stock, and I think, oh boy, because they're the expert, I mean, I'm going to go pour all my money into this because they got to be right on this. It's going to go higher no matter what. And I don't have a plan for my trade. I don't have a stop loss plan. I don't have a risk management plan. By the way, next week we're going to go over and talk about position sizing and risk, making sure we're considering our risk management as well as part of this. I think that's an important part of this process. It is. It's a very important part of the process. But because there's a quote unquote expert talking about something that it's got to happen, that's not what expert technical traders are doing. All of the good traders are looking at the probabilities, looking at how something is acting, and being able to recognize when it's not acting that way. Right now, this stock is acting like it wants to go higher. That's enough to make a trade. Okay, that's enough to make a trade decision. But it doesn't mean it's true. It doesn't mean it's going to keep acting like an uptrend. We don't know what the market's going to do. We don't know what a stock is going to do. We can't ever know what the market or a stock is going to do. All we can do is recognize, how is it acting right now? Is it acting like an uptrend or acting like a downtrend? And if this thing moves up a little bit, and then drops below this low and drops below this low, and then rallies back up, but then rolls over again, now it has a lower high and a lower low. Well, now it's acting like a downtrend. I don't want to be in it when it's acting like a downtrend. Okay, so that's very important as we go through these, because there's an assumption sometimes that because we're talking about it in the class here that it's got to work out, and that's just not always the case. Let's go into a different sector here. Let's look at business services. Marathon Holdings is top of the list here, 100 strength rank, MARA. This is one that's tied into the crypto, the Bitcoin world. I don't know exactly what they do. I just know that there's kind of a tie there. So this can move sometimes with Bitcoin. If Bitcoin goes up, it can go up. If it goes down, it can go down. But again, this is another example of a stock that's been beaten up a little bit, but it's got a little subtle behavior of acting like an uptrend, higher highs, higher lows. Again, a bullish reversal candle today that would give it a higher low if it holds. We don't know if it's going to move up off of this. This one hasn't broken that larger downtrend yet either. There's a lower high, lower low, but the smaller behavior is acting like an uptrend. It's very similar to the one we just looked at. Another one in this list is HMHC, right here, 97 strength rank. And this has actually gone to a sell signal today, but it's actually still a bullish reversal candle. It's actually higher than it opened down here. And this looks like a kind of a ABC correction or a sideways movement. This looks corrective. Now, again, this is another one where probably by the time it goes back to a buy signal, you can see it has a little ways to go back to that buy signal. It could be back up near the top of that range where you just wait for the breakout. But this is one to kind of keep an eye on that could start to move up out of that sideways consolidation there. And then one last one here. Let's look at EVRI right here, 96 strength rank, Every Holdings. And this has just been in a pretty strong uptrend. This is not the strongest bullish reversal day because we opened down here. We actually traded lower. We traded higher. This is kind of a little bit of an indecision day. So you'd want a little bit of confirmation. We'd want this to go back to a buy signal anyway. So there's you'd be waiting for that confirmation anyway. But, this could be a little bit of an ABC pattern right here. We're right at a little bit beyond a 50% retracement of this run up right here. We're right, the intraday low today touched the breakout area from back here. And the previous high, it broke out of that to a new high, came back to it. That can be a support area. What used to be resistance can now be support. What used to be the ceiling can now be the floor. So this is one to kind of keep an eye on. Now, we've been in an uptrend for a while. So again, a lot of these, they may be near their top, like the market could be near its top. But again, it could be one that could have a pretty good probability of moving higher for the next few days or few weeks, and maybe you make a little bit of money on it before the rest of the market decides to correct. All right, so that gives you a few stocks there to consider. Again, I'm not suggesting you get into all of them. And I don't know which of those will work out, which ones won't. I've been in a class before where someone said, I've gone over a list and someone said, I can only afford to get into one or two. Which one do you think is the best one out there, And you just never know. You don't know. And I hate being put in that situation because, it's like, again, the assumption is whatever one I pick is going to be the one that's guaranteed to work out, that it's not going to require any trade management or money management. And also why I hate that being put on the spot like that is because a lot of times in my own trading, some of the patterns I like the most are the ones that don't end up working out. That sometimes the ones that I'm kind of iffy on end up being the better trades. So, after a while, you start to, you see a pattern like, boy, I really like that pattern, but you're like, man, these patterns don't, the ones I really like the most don't always work out. So you kind of, you don't have as much confidence sometimes in some of those patterns. So the key is to diversify a little bit, try to get into a few different trades if you can. And the more you can, the more you can get into good patterns, the stronger your probability of getting those bigger moves off of one or two of them. All you need is a big move off of one or two of them, and it can make the overall profit for your portfolio. It's usually one or two stocks that out of a group that end up making your gains. It's not that all of them are going to work out typically. That's almost any trader will tell you that, which is why it's important to kind of spread things out a little bit. All right, let's get into our trading for today. And the pattern we're going to go over today is, again, it's a continuation pattern. And it's one that doesn't show up very often. And it's one that what's more important is you understand the concept behind it, of what's going on. Because there can be variations, at least that I apply, with all these candlestick formations. Like I said, if you go off of the strict definition, number one, you'll hardly ever find any that match this strict definition. But you always get that one trader out there that says, "Oh, well, that's not exactly the way it is," or whatever. I think if you understand the concept behind it, you'll find more of these opportunities and be able to recognize what's kind of going on. And I think that's more important than knowing the name of the candlestick pattern, or having it do exactly what the definition is. But this is called the rising three method or the falling three method. Now it's a little tricky because actually, well, the rising three, well, just the easy way to think of it is the rising three method is the bullish version of this. The falling three method is the bearish version. Now, what takes place here is usually you're going to have an upward move before this takes place. So you'll have an upward candle, and usually it's a big candle, a big trading day. It doesn't have to be. It could be, and big can be. It could be. It could depend on the context of the chart. You know, this could be a big candle on one chart. Another chart, you might have a smaller move, but it still ends up being big in context with the other. What happens next? It could be big considered with what happens next. So, but you'd want a nice upward, because remember, this is a continuation pattern. So you'd want an upward move to start it, and then what you should have is 3 days that are kind of a pause, and they usually will take place within the body of that candle. So now they don't have to be up or down days. They don't all have to be down days. Ideally, you'd want to have all three of them be down days, but again, you're just never going to find that all the time. What you'd like to see, though, is that they're within the body of that up day. Now, again, ideally, you'd want even the intraday high and intraday low to be within that body, meaning the wicks or the shadows of the candle to be within that body. But again, if you're that strict, you're not going to find anything. You could have a day where it gapped down and actually closed higher than where it opened, but still within that range. But like I said, ideally you'd have 3 down days, but they'd be real small bodies. And what it's showing you is a pause, and that's the key here. Is that you had the big bullish move, and then there's a little bit of indecision or a pause, meaning the buyers and sellers are trying to figure out, well, what does that mean? Does that mean this thing's about to take off? And each one of these little pause days, especially if they're down days, creates a little bit of doubt. So it's trying to shake out the non-committed buyers. Remember I talked about earlier in the update, there are buyers that jump in, they don't know why they're getting in, they're just jumping in. And those are the weakest buyers because they don't know why they're buying. They don't know why they're getting into a trade. They're just trying to make money. They're just greedy. They have no plan. They have no, they're just reacting. They're emotional. And those are the first buyers that are going to get shaken out too. And by the way, I say that like that never happens to me. I mean, there are times where I'm a committed buyer, and there are times where I'm a reactionary buyer as a trader. We're all part of this trading crowd, and sometimes it's easy to say, "Oh yeah, I'm never like that. I'm never the dumb money. I'm always the smart money." But there are times when we're the smart money, and there are times where we're the dumb money. There's times where we're reactive and we're emotional. If we weren't human, we wouldn't do that from time to time. But the goal here is we're trying to be the smart money most of the time. We're trying to be the committed buyer and know why we're getting into the trade as much as we possibly can. We're always fighting the outside forces to be emotional or impulsive. Okay. But what's going on here is it's shaking out a little bit of those non-committed buyers. That's why it's dropping a little bit, but it's staying within the body of that candle. The fourth day, it should be an up day, and it should exceed the high of that first bullish candle. So, and it doesn't matter where it opens. It can open lower, it can open higher, but you'd want to see it close. Ideally, you'd like to see it close higher than that first day. But again, there are variations, tons of variation of this pattern, and that's why I'm really kind of focusing on the concept here. Because sometimes you can have an intraday high and then it closes right at it or a little bit below it. Now, again, that wouldn't be as strong a close, but if it formed that formation, it'd still be a pretty good continuation price action. Meaning, there's a good chance this trend is going to continue. Okay, if it closes above that high, there's a very good chance that this trend is going to continue. Now, this fits in too with the whole idea of ABC patterns, and so you may not get the 3 candles pulling back within the body, but what if you have a upward move for a few days and then you have that ABC correction and then it moves higher? It's kind of that step within the stair step. So it's that same concept. Here's a move right here. Here's your ABC pattern. Then it went higher. This is over several days. But this is a real short-term type of price action, but it's kind of the same concept, that pause within the trend. So the key parts of this and what we're looking at is the directional move, the sharp move, and preferably it'd be on higher than average volume if possible. Obviously, volume is a measure of significance, the significance of the move. Now, does it always have to be 3 days? That's another thing that I've debated with. Now, it's called the rising 3 method and the falling 3 method. And by the way, the falling 3 method would be just the opposite. You have a big down day. You get a couple of up days that stay within the body of the candle, and then you get another down day that goes lower. That would be the falling 3 method. But this is why we focus on the concept, though, because the pullback right here is indecision. It's questioning the first move. What if it's 2 days, but it's within the body of the candle, and then the third day it breaks out? See, this is where I don't get too hung up on it didn't go 3 days, because that's still a strong continuation behavior. What if it's 4 days and it stays within the body right here? And sometimes it could be where it just moves completely sideways, where you get a nice strong move right here, and for 3 or 4 days it just goes like this. And then it breaks out again. That's still a strong continuation behavior. Now, the fact that it moved just flat sideways tells you that there wasn't a lot of selling doubt, because it didn't pull back within that candle very much. But the fact that it ends up breaking out higher would just mean, the buyers there are strong buyers there. It did break out and go higher. So don't get too caught up or hung up on, was it 2 days, was it 3 days, or is it 3 days, or was it 2 days? Now, 1 day, that's going to happen all the time, so that may not be as strong a signal there. But if you get a little bit of a pause after a nice strong up day, and then you, the key is, do you start moving above that high again? Because that's what's going to trigger the additional buying that drives that continuation pattern, drives that trend. And same with the selling. All right, let's take a look at a couple examples now. This is, like I said, this is kind of a rare formation, and it took me, there's only a few that are good examples that I could show you, that I found within the hour I was prepping for the class. And there's, again, I found a few variations, and so I'll go over those variations. But let's take a look at JP Morgan. And there's a couple here in JP Morgan. Again, if you go by the book, it may not fit by the book, but here's a like a 2-day. Here's a bullish day right here, and there's a 2-day pause within there, and then here it broke out higher. Here's a little bit of a 3-day move right here. Here you have the bullish candle. Had 1, 2, 3. The 4th day, it again barely broke out higher. Again, this intraday high went above that day right there. So again, it didn't fit perfectly into that. But like I said, if you're looking for the exact example or exact movement in there, you're not going to find too many of those out there. It just doesn't happen. On Travelers TRV, I found one that had a 2-day pause here in June. Right here. So it had to move up. Again, it pulled back a little bit, consolidated a little bit, and then that 3rd day it moved higher. Now, it didn't go that much higher here, but again, this is just a short-term continuation pattern, and it did move higher off of that formation there. It did continue to move up off of that bullish candle. KNDI back in May. So right in here was the bullish. Here's the bullish move, the bullish candle. It stayed inside for all 3 days right here. And again, it does not have to be down day. This was an up day, but it stayed within the body of that candle. And then that 4th day, it broke higher. Now it consolidated again, but overall it continued that uptrend off of that. And there's another 2-day one on Plug Power PLEG. Right here, had an upward candle, paused for a couple days. Now here it moved higher, but it gapped up, actually moved lower. It closed lower than the open. That would have been that's a little bit of a bearish price action right there. So I don't know that I would have traded that continuation just off of the way it behaved that next day. But it did close higher than it did than that candle there, and it did continue to move higher ultimately. Now, a few examples of the falling 3. This would be the bearish version. Johnson & Johnson. Here in June. You had the big down day right here. 3 days within that body, and then the 4th day it went lower. Now it only went lower again the next day, and then it snapped back again. Again, this is very short term. These are continuation, but they're all these candlestick formations are very short term in nature. Now, the way they can become bigger in nature is if you're combining with a larger analysis, a larger trend. I've talked about this before. It can be, you can draw longer term conclusions off of some of the shorter term price action. Visa, this is a 2-day one. So I'd like at least 2 days, and I wouldn't like more than 4, because then that's just showing that the indecision is too much. I mean, and this goes back to, remember what I always talk about is when you ever see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. Well, the concept behind that is that sideways movement is a pause. And you want that pause to happen, but you don't want it to be too long. If I see a stock that made a real strong move and then it's been moving sideways for 5 months, I don't want anything to do with that stock, because I don't know if I'm going to get it. Ultimately, it should go higher off of this. It should end up going higher off of this, but I don't want to be I don't know how long that indecision is going to last. Why is that indecision lasting so long? Why can't the buyers or sellers decide what they want to do? And I don't want to be part of that. I don't want to be getting into this thing and then having buyers and sellers, especially since I can't control what ultimately happens. This indecision is the big institutional traders. Why can't they decide whether to continue to buy the stock or to sell the stock? They're the smart ones. They're the ones that have all the resources. So we want a little bit of indecision to give us a clue that this trend could continue, but we don't want a lot of indecision. And so I would say in this context of what we're talking about here, have a big bullish move. I don't mind 2 days of indecision and then it takes off. Ultimately, we'd like to see 3 days to have the rising 3 method or falling 3 method. I'll give it an extra day for 4 days, but then it's got to do something after that. If it doesn't, then I just don't want any part of that. I don't want to be part of that, because the more the indecision lasts, the more this pattern it could not work out. You could then get a big down day or something, and maybe that indecision is reflecting that the buyers just aren't strong enough to continue that trend. All right, so on Visa here, back in May, let's see where I think it was right here. Because this is kind of a little bit of a variation to this, which we had an intraday high up here, so it didn't retrace within the body, but it retraced within the entire move right there, and then it had to move lower off of that. That's probably not the best example. KNDI. Back in April, right into here, we had this decent down day. You could even call this 4 days in a row, although this one did have an intraday low that moved lower there. The next day it did clearly go lower there. So whether you're counting this as 3 days or you're going to add that 4th day in there, again, you had more of that sideways indecision, and it continued to move down and continue that downtrend here. Wouldn't want it to go more than 4. Anyway, that gives you a few examples of the rising 3 and the falling 3 method. Again, this is a continuation pattern. And like I said, it's not going to show up all the time, but again, if you can learn the concept and learn the behavior, then when you do see something like that happening, you could say, hey, this is acting like that's a down day, but it's staying within the candle. You've had a couple of those down days in a row that are inside the candle there. It looks like just a pause within the uptrend. I'm going to stay in this trade, or I'm going to stick with this thing. It looks like it's acting like it should continue once those indecisive buyers are out and the confident buyers jump back in again. All right. Thanks, everyone. Have a great weekend. We'll see you Tuesday for the next market update. Bye now.